Don't expect a Bitcoin recovery anytime soon, Galaxy Digital CEO. Billionaire Mike Novogratz has warned investors to not expect much of a recovery in Bitcoin anytime soon. Novogratz, who serves as the CEO of the digital asset merchant bank Galaxy Digital, has always been a big proponent of Bitcoin and its advantages. However, he has recently shared his thoughts on the current market climate and what investors should be expecting in the coming days. Confidence will take a while. The recent market crash has seriously impacted investor faith in the cryptocurrency market. As such, sell-offs across digital assets such as Bitcoin have been rampant. Sentiment has also suffered greatly during this time and has led to low momentum in the market. This is not changing anytime soon. Speaking with Bloomberg, the Galaxy Digital CEO explained that it will take a while for Bitcoin to recover to previous levels. He chalks this up to the confidence level of investors when it comes to putting money into crypto, which he says will take a while for that confidence to return. Novogratz also speaks to the current economic climate. One thing that has rocked various financial markets has been the hiking of rates by the Fed, the most recent hike happening on Wednesday. He notes that the Fed would have to let up on hiking interest rates at some point, and once it does, more money from global macro hedge funds will flow into the market. At this point, Novogratz admits that Galaxy Digital will add more Bitcoin to its holdings. Bitcoin on the charts. The price of Bitcoin continues to fluctuate heavily between the $20,000 and $21,000 levels. This shows that while there is mounting resistance at the $22,000 point, there is also good support building up in the low $20,000s. The short-term prognosis for the digital asset does not look good though. However, there are still some indicators that point to some recovery in the market. One of these is the cycle low before every Bitcoin halving. Related reading: Bitcoin funding rates remain negative, but open interest tells another story. Usually, the bottom is reached at around 520 days, give or take a few weeks, before the next Bitcoin halving. This has been the case for the last two halvings. If the digital asset follows this trend, then the bottom will be reached sometime in the last quarter of the year. Even though this points to some recovery in the short term, it also means that the current lows may not be the end of the decline if the bottom is expected to come in Q4. Bitcoin is trading at $20,902 at the time of this writing. Disclaimer: the following op-ed represents the views of the author, and may not necessarily reflect the views of Bitcoinist. Bitcoinist is an advocate of creative and financial freedom alike. Why crypto could go another 15% lower, this expert says. Crypto has dropped below the $1 trillion total market capitalization and has returned to its January 2021 levels. At that time, the sector was preparing for a massive bull run that would take its market cap above the $3 trillion. This time the sector seems to be threatening further losses and for a potential new leg down into its 2020 levels. At the time of writing, the total crypto market cap stands at $870 billion and continues to trend to the downside on the daily chart. Analyst Justin Bennett believes the sector will imminently take a leg lower. He expects the market to find support at $730 billion as it was unable to hold above the $860 billion mark. The current market conditions, the shift in the U.S. Federal Reserve (Fed) monetary policy, the relentless selling pressure, and the series of negative news in the space seem to support this thesis. This is where we're probably going. Another 15 to 25% to reach the total confluence of support and measured objective. Expect a 30% drop for most altcoins. As usual, Bitcoin holds the key for the entire crypto sector as most altcoins tend to follow BTC's price action. Bennett claims the number one crypto by the market could see a similar 15% to 25% drawdown if it breaks the $20,000 area. This would send BTC's price to its next critical support zone at around $19,850 and for the first time in its history below its previous all-time high. On lower time frames, data from material indicators, ME, records over $15 million in buying orders for BTC at $20,000. In the opposite direction, there are around $9 million in asks orders at around $20,900 which could operate as resistance in the short term. Will Bitcoin bounce with the stock market? The benchmark cryptocurrency has been moving in tandem with traditional equities, mainly the Nasdaq 100 index and the S&P 500. According to Jarian Timmer, director of macro for investment firm Fidelity, the S&P 500 has reached oversold levels. The weekly stochastics for the SPX, it's at oversold readings consistent with major bottoms. I don't believe we're there yet, but we could be getting close. We're only one PE point away from fair value. If equities find a bottom soon, as Timmer claims, Bitcoin and the crypto market could bounce and prevent Bennett's scenario. The drawdown in traditional finances has created a capitulation event, as seen below, which could play in favor of digital assets. Bitcoin long-term holders now own nearly 80% of realized cap. On-chain data shows the part of the Bitcoin realized cap held by the long-term holders has increased and is now at nearly 80%. Bitcoin long-term holders own almost 80% of realized cap. As explained by an analyst in a CryptoQuant post, the crypto has historically tended to form bottoms around when the long-term holder share of realized cap has exceeded 80%. The long-term holders, LTHs, are all those Bitcoin investors who have been holding onto their coins without selling or moving since at least 155 days ago. The realized cap is a way of assessing the capitalization of the crypto where each circulating coin's value is taken as the price it was last moved or sold at, rather than the current BTC price. Now, the relevant on-chain indicator here is the realized cap, UTXO age bands, %, which tells us what part are the various groups in the Bitcoin market contributing to the total realized cap of the coin. The various age bands denote the amount of time investors belonging to a group have been holding their coins for. As mentioned earlier, LTHs include all cohorts holding since at least 155 days ago. Looks like the value of the metric has observed rise recently. Source, CryptoQuant. In the above graph, the quant has marked all the relevant points of trend related to the Bitcoin realized cap percentage of the LTHs. It seems like whenever the indicator's value has crossed the 80% mark, a bottom in the price of the crypto has taken place. Related reading, Bitcoin funding rates remain negative but open interest tells another story. Currently, the metric's value has been rising up in recent weeks, however, it has still not gone above the threshold just yet. Nonetheless, the indicator is nearly there. If its value continues to rise and the historical pattern holds this time as well, then Bitcoin may observe a bottom soon. At the time of writing, Bitcoin's price floats around $21,000, down 30% in the last 7 days. Over the past month, the crypto has lost 30% in value. The below chart shows the trend in the price of the coin over the last 5 days. The value of the crypto seems to have been moving sideways over the last few days. Source, BTC on TradingView. Since the crash a few days ago, Bitcoin has been mostly consolidating around the $21,000 mark. Currently, it's unclear whether the decline is over, or if more is coming. If the LTH share of the realized cap is anything to go by, then BTC may first see a bit more decline before the bottom is finally in.